Today, our event is called The Future is Shared Services. And it is going to be moderated by myself, I'm Lisa, and my business partner, Peter Castanis. And we have as panelists Earl Gill, Robert Frederick, and Paul Macon, who I will introduce in just a moment. We're all from a boutique consultancy called Digital Financial. We're a group of senior financial service experts who come together in order to give the best possible knowledge and value to our clients, who include small, medium, and large financial institutions, development organizations, governments, and central banks. You see our value statement on the bottom of what we believe, but I would like to bring out that this is a moment in time when digital financial services are poised to change the ability of all persons to be included and to be part of the formal financial ecosystem. And we strongly believe that smaller financial institutions, credit unions, microfinance, and smaller banks are key to reaching all persons with financial services. I have here with me today Earl Gill, who is a senior international banker with 35 years of experience across the Caribbean. You see his laundry list of places where he has worked. He is an executive champion of change across technology, processes, and people. And one of the things that he is a specialist in is the use and development of shared services in order to deliver better member experience and operational efficiencies. Joining us from Castries is Robert Frederick, known as Bobby. And again, you can see his extensive knowledge and understanding from working in the Caribbean and Central America. And in his executive positions, he's had a 360-degree view of what happens in a bank. He's been responsible for sales, product, operation, and compliance across both retail and commercial channels. And again, he has found that the use of shared services has been one of the ways to make banking both more friendly and more efficient. We were going to have Phil Broom, another gentleman with a great deal of experience in the Caribbean. He's a technology expert, and he has unfortunately been called away on a family emergency today. And so Paul Macon, who had just joined me on a presentation to deal with the future of payments, is stepping in to talk about the idea of technology and shared services.
Your emergency stand-in payments consultant.
Exactly. Well, when I call you digital pioneer, that means you're on the hook for everything, Paul.
Yes.
And as this is about shared services, we're going to work together in a collaborative way. So we're going to just use the PowerPoint to guide the discussion. We're not going to stick to it rigorously. If the conversation goes a little off, that's just fine. And if your questions come up in the chat and we need to slow down or to go back or to move forward in our slides, we're very happy to do so. So I'm going to start with, what do we mean by shared services? And very broadly, the idea of having your large business model goals aligned to serve the entire organization's needs. The thing with shared services is that it capitalizes on best practices to drive incremental efficiencies. And as Earl would like to say, leverages people, processes, and technology. This is a bigger concept than centralization. Centralization is a start. It's bringing together your experts who do certain jobs particularly well, putting them together, driving your processes so that you're not having everybody do everything, and instead you're having the most suitable and competent people do the various parts of the job. And it's using that same idea with your technologies. Why should you be doing processing in 3 or 4 different places when it is much more efficiently handled in one? But it is much more than that. And Earl, can I ask you to give a brief introduction to this idea about leveraging people, process, and technology?
Thank you, Lisa, and good day to everyone. Shared services definitely leverages people, process, technology to maximize internal and external customer experience, improve operating efficiency, etc. Given the impact on shared services on the organization, it is very important that the leaderships of those organizations have a clear vision of what the shared services model is going to look like, and also that they have the ability and the capacity to translate that vision into reality. I know that most of you would have done your SWOT analysis, gap analysis, business model canvas, whatever you want to call it, to get appreciation of where you are in the market and where you want to go. And that's very, very important when you start to look in terms of how you want to plan your shared services, etc. So where do you start this journey? And really, you've got to start this journey with the existing plan of organization and look at people, process, and technology. Are your people appropriately placed and aligned to improve that member experience? Are your processes really member-friendly to improve that member experience? Are they efficient? Is the technology supporting your member experience? Is it antiquated? Do you have challenges? How does it help you to move to the future? Sounds like a lot. Well, it is quite a bit. So in essence, you really have to start to do those, what I call end-to-end review processes over your people from the start, how you hire, how you promote, how you coach, how you lead, all those various good things that develop our people. You have to look at your processes and say, okay, fine, how inefficient they are. Do you need to do work simplification? Do you need to modify them? In essence, when you move to a shared services concept, you really can't take inefficiencies into that shared services model. So with all that, now you need to look at a new plan of organization. How does that pan out? How do you need to modify? How do you need to implement? So shared services really is going to help you to improve your overall performance, improve your member experience, and at the end of the day, to make that organization more cohesive and goal aligned.
Great. My next slide is talking about types of shared services models. And I'm not going to spend a lot of time on it, but it's important to know that there's a lot of ways of looking at it. It could be within your own credit union. So you could take this model, you could make yourself have centers of excellence, be more efficient within your single credit union, especially if you're a larger credit union with multiple branches. You have a lot of different products and services that you're offering. This could really be important to you. The other thing that we've seen around the world is a group of financial institutions that have a common set of rules. And this could either be a large international banking group that's got a head office. The gentlemen who are on the event here from Scotiabank certainly experienced that. It could be across a league, the Jamaica Credit Union, and what they've been coming together to do. And it could actually be driven by your regulator. Consider the ECCB talking about shared service onboarding to deal with the complexity of AML, CFT, CPF, which is a really difficult thing for individual smaller institutions to take on. And there's something really interesting happening in different parts of the world where entire regions have come together to say that they're going to try to agree on a set of standards. And we're seeing this in the Pacific Islands, where small islands have come together and said, we're going to be sure that if a fintech goes through the regulatory sandbox in the Solomon Islands, that means that that fintech is going to be considered acceptable for use in Bora Bora or Fiji. And something like this might be very useful in the Caribbean at a point in time as your fintech and other services really develop. There's lots of combinations. I am sitting here in Canada with Peter Castanis and Earl Gill, and credit unions in Canada have done really interesting things. Even though they have a mixed bag of regulatory requirements, province by province often, they have come together to create something called Central One, which is owned by and serves 113 credit unions. And through Central One, they have shared liquidity management, they have a payments provider, and they've got what we call a technology wrapper. So they've got a set of technologies that sit across any core banking system which allow all 113 credit unions to use the same digital financial services, whether it's a payments app, whether it's an internet product and application, they can all use them together. And I've put the link on our slide here. It's called Forge, and it's really interesting. Another thing that Canadian credit unions have done is they've come together to be part of a network of ATMs. And this is 3,700 no charge to your member ATMs across Canada, 40,000 of them in the United States. They also have come together to use merchant services, Alipay and WeChat Pay. What's interesting is that as a credit union, you can belong to Central One, you can belong to FinConnect, you can belong to neither or both. It's up to you. And that's the ideal thing about shared services, would be choosing what is right for your organization. So why do we move to a shared services model? To deliver the best-in-class products and experiences to your members. So I've got some strategic challenges up here, and I'm sure they're familiar to all of us. The idea of increased competition from banks, from retailers that are getting into the digital financial services game, from fintechs. How do you compete with these things? There's more regulatory requirements, capital, liquidity, reporting, compliance, and coming out of COVID, all of these things are going to be really challenging. I'm thinking about the challenge of loans and what's performing and what isn't, and how are you going to have to manage capital and liquidity. And then also technology challenges are really coming up. Mobile banking, contactless payments. Can your core banking system handle this? What about cloud services? All of these things are difficult for a smaller institution to implement on their own. They're tricky, they require management, and quite frankly, they're costly. But this is a way, if you think about using the cooperation among cooperatives, your sixth principle, this is a way to come together and make these possible. So my next slide here is looking at this idea of what you can do in a single institution and what you can do with an association of institutions. And I'm wondering, gentlemen, Earl, Bobby, do you have any comment that you can make on this from your experience with an international bank, where you would have gone in and had to help in a country, get things organized, and then take things at a larger scale?
Yeah. Yes, Lisa, I could comment on that. I remember in one particular location, we looked at the whole front office, back office operations, and the sales teams were heavily involved in a lot of paper. Each particular officer was dealing with paper, and the customer was not being served in the most efficient manner. So one of the things that we did was to take all that processing, mortgage processing, contacts with lawyers, and concentrate it on one particular desk, one particular position. That resulted in the sales officer having more time to serve the customer. The customer experience improved. And in fact, they were able to generate a number of referrals from having delivered better customer experience in that particular scenario. So that's a single type consolidation within one branch. And of course, I'm sure Bobby can probably comment on others that he would have seen across the Caribbean.
Yeah, an extension, if I may say. First of all, good afternoon, everyone, and thank you for the opportunity in allowing me to share some concepts with you centered around shared services. Welcome, everyone. Yes, as an extension to Earl's comment, one of the things that has come out of proper implementation of this concept is that you allow your sales officers to focus more on building relationships. And in building relationships with your membership, you're highly more likely to foster member loyalty. You're highly more likely to improve your retention. And indeed, by extension, be a likely source of referral through that automatic process. But with your sales officer's emphasis on catering to the customer's needs, those issues are covered off quite dramatically.
And let me add one point to that, Bobby. The other thing too that we realize, and you would have seen it as well, is that some of our sales officers, or some of the sales officers, really were interested in building relationships and working with customers. The challenge they had, they didn't like to deal with what they would consider the paper that would bog them down. So you found that from that perspective, the paper suffered and the customer suffered, because they didn't like dealing with paper. They wanted to serve customers. So it also helps that sort of alignment of the appropriate staffing type of person in the frontline positions.
Yeah, and in my experience dealing with a large retail operation, one of the things that we found is that, well, there are people who are people, and that's wonderful. There are also people who are incredibly organizationally efficient, and they are not necessarily in their happy place being asked to be frontline dealing with your member coming in with scattered bits and pieces of information. And instead, this is someone who is able to deal with the intricacies of what documents are required with a mortgage. This is someone who is able to organize what needs to be checked, what needs to be put forward. And when you put that person in the place where they can thrive and where they can really see that they make a difference, you have a happier person. So I saw it on both ends. And the other thing that I noticed is that if you consider that everyone should be treated as a member, everyone should be treated as a customer, that then when your frontline salesperson needs something and they talk to your operational expert treats them as an important person and helps them solve the problem. And all of this, once again, comes back to your better service, but it also, I think, gives just superior control of what's happening with your documentation. Go ahead, Earl.
Better goal alignment, as I like to say.
Right. I'm going to ask Paul. I'm putting you on the spot here because you are our stand-in. But one of the things I've got up there is this idea of an association of institutions and coming together to give yourself negotiating power for your service contracts for things like your technology. What have you some opinions on how that can work well? I'm thinking about the horrible thing of core banking systems and how expensive that gets. What are some of the options for smaller institutions?
Well, core banking systems is probably the area. There's a few areas there that I can see that are appropriate. First of all, core banking systems. There is a growth in this software as a service, bank as a service model. There are a number of providers. I'm dealing with one at the moment where there are, I think, 3 or 4 different MFIs using a shared core banking system, which works for them. They're not responsible for the operation of the service. There are a couple of side issues with that. One is any such arrangement is only as good as the weakest link. So if the organization is operating the shared service is not up to par or isn't on top of the cybersecurity issues, for example, then all of the financial institutions are vulnerable as a result. The other is innovation. It can be difficult to innovate, to differentiate yourself if you're on a shared service, to change the functionality of or extend the core banking system is very difficult when you're on a shared service. And the last is actually, oddly enough, on cybersecurity. If you decide you want to reach out to some new service and that new service requires a particular security implementation, then when you're on a shared platform, you're not free to adopt that. So it might mean that you cannot perhaps link into those other services that you want to in order to provide services to your customers, simply because you're on a shared platform. Some of the others, Card issuance is a classic shared service. Lots of organizations do that with limited risk. It's well understood. Cloud services, that's one that people really should be doing more of, but I know regulators are very nervous about it. You can argue the pros and cons of that, but if regulators won't let you do it, then they won't let you do it. There's arguments that you can get over some of their concerns around data jurisdiction through agreements between regulators in different governments, but that's out of scope for this. On services such as KYC, AML, CFT, there is a big growth in shared services there. It's probably one of the biggest areas. And I know that organizations such as CGAP and, in fact, many of the people from Digital Financial have worked on shared services in that area in particular. I've recently been working with one organization in Kenya that wants to do exactly this for all of the banks and mobile wallet operators in Kenya. They have got into all sorts of concerns around privacy and data protection. So if a particular organization or credit union gathers the customer's details and then uploads them to the shared service, did that customer actually really understand that they were going to be doing that, and that data might then be shared with every other financial service provider in that country? There is a bit of a legal question mark over shared services in that area at the moment. It's not insurmountable, but yeah, can definitely be a concern.
It's interesting in the Caribbean, Paul, because the Eastern Caribbean Central Bank is really championing a shared services model for compliance and AML. Yeah. And I guess if the regulator is there and saying this is what we want to do and helping to set out the ground rules, I guess that's the ideal situation.
If they can provide the regulatory cover, because remember you're talking different regulators here. It's unlikely that the data protection registrar is also the central bank.
No, yeah, I get you. But yeah. I guess having the champion at that level
absolutely
is a good first hit.
Yes, and I'm not trying to discourage it. I'm just saying go into it with your eyes open.
Right.
In terms of, is it a good idea? Oh yeah, very definitely.
And one of the other ideas that we've got up on our screen here is the idea of a centralized collateral registry. If you're in a situation where you don't have a credit bureau set up in your region and in your jurisdiction, perhaps one of the things that you could think about is this idea of a shared collateral registry, so that you don't get loans being taken out at multiple financial institutions on essentially the same collateral.
Happens in every country.
Yeah, I'm sure it does. Earl or Robert, do you have something to say about that, given the situation in the Caribbean of some credit bureaus and some not?
Well, I think the credit bureau, certainly from the standpoint of the Eastern Caribbean Currency Union, with which I'm most familiar, is something that's long overdue. But as an interim measure, the idea of a collateral registry will definitely complement the thoroughness with which institutions can serve their members in a timely manner. But I think it's definitely an area that ought to be explored as we await the eventual outcome of a credit bureau. In the larger territories in the Federation, there are various credit unions, I know, in Jamaica and Trinidad and to a lesser extent Barbados. But certainly in the Eastern Caribbean Currency Union, there have been several attempts, largely driven, stimulated by the Eastern Caribbean Central Bank, but it has not gone very far. I know it's still on the radar, but I think the idea of a collateral registry among the members of the credit unions confederation will be something worth considering and exploring.
Paul, I'm bopping around here, but can I come back to you on the idea of issues around identity?
Yeah, identity is one that is a question that underpins a lot of this. I mean, we talked about KYC, AML, etc. Identity is really important on that, but also on the centralized on a credit union, a credit reference agency, or a collateral registry. Having an identity, a digital identity tied to every entry makes everybody's job a lot easier, a lot more straightforward, and it has to be a unique, verifiable identity as well. One other thing I did want to say on cybersecurity. Cybersecurity is one of those areas where people are most unwilling to operate a shared service. However, in a few countries, what I've seen is that the security people within a credit union or a bank or an MFI, whatever it is, they get together in a on a Chatham rules basis, Chatham House rules basis, so that they can talk about the risks that they are seeing, the attacks that they've seen against their systems, so that they can share that information with the other security people across the sector and alert them in advance, so that they can put in countermeasures before the attack hits them, and that's been very effective. No organization wants to come out publicly and say they've been attacked, because of course there is immediately a credibility issue, and banks get concerned that people won't deposit their money with them if they think that the bank is being attacked by hackers or whoever. But that slightly less formal mechanism seems to work very well in that case.
And I'm going to look at my little blue note onto myself here to think about the approach to people, and this idea that we can start with work simplification, but actually end with a much bigger concept with this, which is centers of excellence. And I've got my next slide, and I'm going to ask Earl Gill to speak on this, because this is very, very much right in your wheelhouse, this idea about what do you do with your staff?
Yeah, thank you, Lisa. So I think in my opening remarks, I talked about the people and the importance of the people. And when you're moving to a shared services concept, you really have to identify the right person, so to speak, to be in the right jobs. When you look at the current environment, not to take away from people's skills, etc., but sometimes you have an individual who is in a sales function who really should be in a processing or back office function. And also the other challenge you have around that is that people are in jobs, but they've never been trained or coached. And also the supervisors, the leaders have never been coached. There's no sort of leadership development programs. So the people part of any organization, any change is very, 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 very critical for its success. But with these shared services, I believe, and you said it earlier, Lisa, people, I believe, tend to be a lot happier. What I saw from my experience, that the folks who like to interface and build relationships, when they had the opportunity to do that without any interruption, they did extremely well. The folks who didn't like doing that and went to the processing side of it did an extremely good job. So you had that synergy being built where those centers of knowledge and experience came together. And because you're doing those processes over and over and over and learning about new best practices, all of a sudden you find that you're creating this center of excellence where you can rely on that shared services, that entity to deliver what it is that you are looking for to satisfy your member experience. So I think on both sides of the coin, excellent approach, certainly goals align the organization, and at the end of the day, better customer relationships. And I like to bring it back to the improved profitability, efficiency, happier people.
I'm glad you spoke about that, Earl, because one of the things I wanted to address here is often people think, oh, you're going to do shared services, and that means you're just going to slash and burn people's jobs. And instead, what we're trying to talk about here is look at the fact that you now have freed up a bit of resource. This should allow you to do a better job of all the things that you do. This isn't about downsizing. This is about having the appropriate people doing the appropriate things. And if you've got some cycles within your staff, you can now do things like proper training programs. You can do job shadowing. you can do all of these things that you can't do when everybody is just running full out to do the number of things that are on their job description. And one of the things, sorry, go ahead.
Sorry, Lisa, if before you move away from that
so there-
observation, one of the things that I can attest to from personal experience is that once you get to that stage of retraining and redeploying, it is amazing how it benefits at so many levels, particularly the opportunity to grow and build deeper relationships with your member base. It gives you the ability to strengthen your sales force, because you now have a pool from which to draw the best talent.
Lisa, if I may just add to that, and of course, when you're dealing with people, people are the most important part of the organization. Without people doing the right things, and being good aligned, you're going to have issues and challenges to work with every day. So the whole communication, I cannot help but reinforce that. Explain to your teams, where did you want to go? If it's a sales vision, what it is you're trying to achieve. If it's on the shared services vision, what do you want to achieve and how it's going to come together? That is very, very important, because without that, you're not going to get the full synergy, because people are not going to be singing from the same song sheet, if I may use that term.
Sure, and I can see that this applies also when you look at technology. I think in an organization, when you go through what Robert and Earl are talking about, and you really talk to people and find out what their skills are, you're going to be amazed at some of the skills that are within your organization. You might actually have somebody, doing a job that you don't think they know very much about technology, and guess what? They're doing all sorts of cool things at home. They're the sort of person who they understand social media, they're up to date on something, they're running a server box at home and learning programming languages. Well, if you've got somebody like that, you should give them the opportunity to go to where they shine. And if you can do that, I think a lot of credit unions and microfinance have found that they have way more talent in their organization than they really understand. One of the things that you're talking about, things for members, and I'm just imagining a situation where, let's say, if you have a shared ATM network amongst a group of credit unions, and you have a shared mobile phone app, perhaps for digital payments, and then you have a shared call center. That call center can do a lot for people, because that call center can answer questions across all of your shared pieces in a really, really efficient way. And then all of a sudden you're delivering 24/7 support. So I think that there's a real potential to sort of think big when you do this. And Earl, I'm looking at my blue notes and saying investing in your staff is investing in your members. And I think that pretty well cuts across the board.
But you should also make sure that what you're putting together isn't just a collaboration that is good for you as an organization. You have to think about it from your customer's perspective, and very often they will find perhaps nicks or some variation in service depending on which particular organization is running, say, part of a network of ATMs, and you find that they don't like the way you're doing it, and you end up duplicating services all over the place just to try and keep customers happy. You need to really think about what the customers see, not what you and your staff see.
That's a good point, Paul. And within bringing back to the whole concept of shared services, that is where you need to measure your member experience and your net promoter score, right? And getting focus groups in to really delve into how you're delivering service, right? What could be tweaked, what could be done better? And you're quite correct. A lot of times we tend to think from our perspective, from our desk, but what it is that the member is seeing on the other side that you're not seeing, and how can you bridge that gap? So I think it's a very valid point that you're making.
You hit the nail on the head, Earl.
And it actually goes right into the next slide here, when we're talking about, yes, all these efficiencies that you see, and the fact that you see less mistakes when you have people whose attention isn't divided from the work that they're doing, and then this idea of greater attention to your member. And we've got a point here from Earl and Bobby about needs analysis as opposed to assumptive selling. Bobby, would you feel that you could take that on?
Thanks, Lisa. I can probably start for the benefit of our participants in being forward enough to provide the classic definition of assumptive selling. It's a practice of trying to sell something by acting as though the member that you're trying to sell it to has already decided to buy it. Assumptive selling also assumes the person wants to buy it. So the salesperson says things like, do you want the red one or the green one? I mean, this was often popular with institutions that were where their growth strategies were driven by pitching products. Unfortunately, we are in a different environment now, and this practice has been found to work against building customer confidence and loyalty, which present obstacles to customer retention and growth, as I alluded to earlier. What this is happening against the backdrop of an environment where sales officers are charged with numerous administrative responsibilities, right? And a proper customer needs analysis is too often compromised because the officers are sort of driving other priorities or juggling numerous priorities. So it creates an environment to move away from the assumptive selling more toward the needs analysis, where the sales officers are able to conduct proper needs analyses, thus identifying the products and services that best align with the needs of the customer. Indeed, this is the foundation for building strong relationships and improving member retention and business growth in a cost-effective way.
Right.
I might just add very quickly, Lisa, it also improves, this level of engagement also improves positively the impact on your delinquency.
If I could just add to that point, and you're perfectly correct, Bobby, one of the things that also I experienced that when you start to look at a pay for performance philosophy concept, sales officers or persons in sales tend to drive the numbers in order to reach that higher level of performance, to get a higher incentive or to improve the annual performance pay. So that is another thing that you have to look at to balance within the organization, that you don't have an overly strong extreme focus on a compounded annual growth rate to the extent that people feel that they need to just assumptive sell in order to get a satisfactory performance rating. So I think there's a balance that has to come in there. And that comes through the coaching as well as involvement in looking at those metrics and drilling down a bit more in detail.
I'm moving us across quite quickly just because we had quite a slow start here. So Paul, I'm kind of giving you short shift and asking for just a quick bit on this idea of is there a way when you look at shared services and shared technologies to sort of drive down your cost and increase your ability to keep up to date?
Again, shared services, obviously. One big advantage of shared services, particularly in the core banking space, is that you're forced to keep up to date with developments. You don't get the choice to delay your upgrade to your core banking system because your provider does it for you automatically one Saturday night. Tough. Which means that, of course, you're getting the latest version of the service and also the one that is best protected against cyber attack. So there are big advantages in having a shared service in this regard.
Great. Moving us forward on the ongoing journey to shared services. Sorry. And here's a bit of a roadmap, if I can say this, given that given what we've got going here. Oh, I'm sorry, we've just lost my screen. I will reshare. I'm very sorry about that. So the ongoing journey to shared services, starting with getting your house in order, which we've talked about a bit, the idea of assessing your people, work simplification, renewing your plan of organization, and addressing in your staff, investing in your staff. The idea of partnering with other credit unions who share your standards. This is something we see in the Canadian model, much or as little as your business needs. And Paul, I think you brought this out when you were talking about technology. Negotiate carefully, right? Begin as you intend to continue. And then the question that Paul also brought up is the idea of maintaining what makes you unique. And one of the things I've heard Earl and Robert talk about is instead of differentiating on necessarily your technology or even your product, differentiate on your service, differentiate on your understanding of the particular kind of customer that your institution has a mandate to serve. Would either of Robert or Earl like to speak on that? Or Paul, you might have something there.
I was just going to say, before Robert and I'll come in, just to say that a shared service, if it's done properly, has a lot of facets to it. You don't necessarily use every single one of them. And I'm thinking of a quality use service, shared service. And that means that allows you to differentiate slightly. You use your particular subset of the overall functionality to deliver your service, for example. And that allows you to be distinctive. It makes you unique. So it's a question of choosing the right shared service, I think, rather than just the cheapest.
Yeah, I echo those comments. I think it comes back to the organization's goal and vision as to which sandbox they want to play in. If they have a vision to be the best and most efficient mortgage lender, then that's what they focus on. And as you quite correctly said, the shared services will be able to deliver all the support mechanisms to achieve that. You know, if they want to be the best auto used car financier, to use that term, you know, so I think that the organization has to drive where it wants to go and align its members, its employees, as to what the value add is. That when you come to organization A, this is what you expect and this is what we deliver. And we're known for that. And we provide that exceptional value to you in that particular segment.
Bobby?
I have very little value to add on this subject. I think it's pretty much covered already by both Earl and Paul.
So something that I can see being important, you know, right now we're seeing the issues of climate change and the way that is in the Caribbean. Well, if one of the things that your credit union is strong at is the idea of that you're willing to invest in small organizations becoming green. Are you supporting merchants to do that? You can keep that distinctiveness even if a whole lot of your back-end processing is happening in a more shared service environment. You can still keep that feeling that what your focus is that you are going to understand what's involved in giving a loan for a small business to put up solar panels. So you can keep that focus. Paul, do I sense that you have something else to contribute on this?
No, I'm just thinking of various cases where I've looked at shared services. I can think of one where I was working with a credit union doing exactly this, and as we were discussing earlier, it's about the shared collateral database. But part of the problem is, you know, as you move to technology, in particular, you really need to understand the impact that has on your staff as well and the way that they work. Mm-hmm. So you might give them a mobile phone, you might even give them a tablet on which to complete loan applications, for example. But you will find, for example, that your loan officers go off into remote areas. There is no mobile data coverage. So they end up doing all their work at home at the end of the day, having written it all up on paper. And that's really not fair on your staff. So you really need to start thinking about that type of element. And maybe there is a potential there for looking for shared services which are actually beyond your existing remit, the way you do business now, as you change the way you do business through digital transformation, you may find that you need access to new services that you'd never thought of before, such as data collection offline, for example. Things that are around there, they are new markets to you, and you may not be aware of how to even access them. But I'm just trying to say, shared services aren't just about what your business needs now. As you go through some form of digital transformation, it changes the way you do business, and therefore you need different shared services, and you need to do a discovery process around that so that you understand what is available and what might benefit you.
That's actually great, because you led me right into my next slide, which is the idea of prioritizing. If you look across your organization, you're going to find all sorts of places where you could do some form of a shared service that would be helpful. You can't do them all at once. So how do you figure out what are the things that are really going to help you? To use an Earl Gill term, I believe you used the term, Earl, about low-hanging fruit. And one of the things that we've done is we've thought about this, and we've thought about a scorecard approach to it. About, first of all, is it mandatory? Right? Do you have to do it? Does it address something regulatory? Does it get you out of a bind? Is your core banking simply not going to be able to do the next generation of things you want to do? You have to do it. Does it make a positive material change? Does it change a key business driver? When you look at your organization, when you look at your members, when you look at what people come to you for, is this shared service that you're thinking, is that going to improve it? And is there a realizable path? Can you actually see how to do this in the relatively near term? Or is it massively complicated? Does it have too many regulatory challenges? And then the two core things: does it strengthen a foundational member service and relationship? Does it really give something better to your members? And does it change the culture within your own credit union in a positive manner? No point in doing something that's going to make either your member experience or your staff morale lessen. You want everything to be going in a positive direction. And if you look at a shared service that you're thinking of and it clicks all these boxes, that's probably something that you should be putting right to the front of the agenda. This kind of tool is also very useful in considering how much to invest in updating or maintaining an existing process or service. Paul, you're talking about change, and that there's things that you're doing now as a credit union that you may not be doing in 5 years. There's things you were doing 10 years ago that you shouldn't be doing now. And taking that kind of good hard look could really generate efficiencies and improvements. Robert, Earl, do you have anything to add to my passion plea?
Yeah, I would just add that for me, and I go back to my own personal experiences, the things that drive that to me is what I would put into the bucket of reputational risk. If there are things that impact the organization from a reputational risk perspective, where tomorrow morning the organization is no longer going to be there, the staff no longer going to be there, then those things need to be addressed immediately as a top priority. And then from there, you look at your customer. If you're losing, market share, then you need to do things around that. So I tend to look at those things in those two buckets. And of course, you can play around with them as you like. But to me, the reputational risk one is really, really important.
Yeah, if I could just add, I think we need to acknowledge that we were trying very desperately not to be too prescriptive today, but rather share some concepts with you around shared services. And no matter what their strategy is, I'm sure we can all agree that it is clear that the status quo is no longer an option for most financial institutions, including credit unions. I mean, with costs and competition, complexity, and uncertainty on the rise, credit unions need to find ways to operate more efficiently and nimbly. And I'm pretty certain many of you already have plans along these lines. Effective partnerships can enable the credit unions to achieve the scale needed to control costs and the shared capabilities needed to service members more effectively. That's pretty much my contribution on this one.
That's a great wrap up, Bobby. And in fact, I'm using that to close out our event. And you can see that I'm putting up some of the ideas of imagine these things for the future. We've talked about the idea of collaborative customer due diligence. We've talked about in our first presentation and a little bit here, coming together to have an interoperable real-time payment system for Caribbean credit unions, and how exciting that could be in terms of the ability to transact with each other and to transact out into the larger financial ecosystem with the banks and with the central banks. Something that we've done here in Canada, credit union branches and ATMs across the region, as they say, ding free, no charge for your members. We've also talked in our previous event and a little bit at the very beginning here. How about the idea of coming together to have group-based insurance and pensions that could be done at a manageable cost if enough credit unions come together? There's the centralized collateral registry. There's shared cybersecurity. We have talked a little bit about core banking systems. Paul, I went off the reservation because one of our other associates is a cloud services expert, and he's seen a couple of jurisdictions where institutions have been allowed to put parts of their core banking processes up into clouds, and that a good cloud agreement, and you have to negotiate your service level agreement really carefully, but that then has the cloud provider keeping it always upgraded, making sure that you're always compliant.
Yep.
And really near and dear to my heart, the idea of shared disaster recovery in business continuity. The idea that it's very expensive within a small island, for example, to share data centers and data recovery areas and things like that. And if instead you had an agreement amongst the credit unions of an island, perhaps at the league level, that says we're going to have a rollover ability for our data and for our services, and also that we're going to have a shared way that we can keep track of where our key staff are so that we can help in times of crisis. I'm thinking of a hurricane. That could also be a very valuable thing. Are there anything, gentlemen, that you would like to add? I've rushed us through because we had a little bit of a late start, but I wanted to be sure that we did do justice to some of these concepts.
I just wanted to expand a little on the shared cybersecurity function. I said before that a shared function doesn't necessarily work in itself, and that an ad hoc information sharing amongst organizations works better. However, there is definitely a role for an independent shared cybersecurity function, a regional center or a national center, which provides that cybersecurity expertise that a credit union can go to when they think they're under attack. The important point there is it's not run by another credit union or a bank. It's independent. And I think that is definitely where a shared cybersecurity function has significant value.
Actually,
Robert,
one component of your business model, and I think an earlier presenter did an extensive presentation on the subject today, is business continuity planning. And there may be an opportunity for the BCPs to fall under that concept as well. It will drive costs down, and it is not necessarily a differentiator that drives competition between one institution and the next. So the BCP shared services arrangement might be one that's worthy of consideration as well.
And sorry, Earl, do you have anything that you'd like to add at the end?
No, I think Paul, Bobby, yourself have covered it off very well.
I've been keeping an eye on the questions, and I haven't seen anything come up in the chat, but we are very pleased to get your emails. We are very pleased to get your questions. This is something that the associates at Digital Financial have done for quite a number of institutions, and we would be very happy to talk to credit unions in the Caribbean about how some of these shared services concepts can help you not just stay in place, but actually truly grow and compete as you come out of the challenges of COVID. I would like to thank everybody for giving us this opportunity. And it was really, really great to see a large number of people here for us. And thank you for your kind comments in the chat.
Thank you, folks.
Thank you, everyone.
Good day.
Thank
Bye.
you.
Bye.